and welcome to this Monday edition of FreightWaves Now. I'm your host Anthony Smith, and we're starting off the week strong with a full lineup. Luke Falasca is going to give us a broker update. We also have Andrew Cox with a shipper update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hello and welcome to this Monday carrier update presented by PowerFleet. I'm Zach Strickland, and today we continue to watch these volumes level out throughout the first little bit of June here. So we're at a 11,057 on the current 2020 track here in blue. You can see that it is well over the 2018 in green, 2019 in purple there by a good percentage point. We're about 2.5% above where we were in 2018. The interesting aspect of the OTVI here of late is the fact that it's starting to fall into what we consider more of a seasonal pattern. So you can see the last couple of years, we're really kind of following that Memorial Day, and then we kind of flatten out going into the first part of June. And this is traditional for, early June into mid-June. We kind of have this holding pattern in terms of freight volumes. They should remain relatively level. You see 2019 there, it really kind of took a lot more of a lull in the first week of June before starting to push back up only slightly. We peaked out in 2019 right around 10,400. We are already well above that this year, however. So volumes continue to be a strong part of the freight economy right now, so the carriers out there should be seeing relatively healthy volumes where they're going. Now, what's not healthy is a lot of tender rejection rates. They are still relatively low. Carriers are still taking on a lot of the freight that's offered to them by their shippers. But the volumes throughout the United States right now, outbound tender market share tree map, we're looking at anything in green increasing week over week, anything in red decreasing week over week. You see here that Ontario and Atlanta, our two biggest markets in the United States, starting to soften a little bit. We're seeing them not necessarily lose volume, but lose market share. So relative to the rest of the country, they are dropping percentage points. Still the two largest markets in the United States, however, but there are some markets that are starting to pick up some of that market share value. One of them being Memphis, Tennessee. Memphis, Tennessee, of course, right in the middle of the country. And we do have a little bit of a weather situation going on there, but Denver, Colorado, returning to glory, continuing to gain a lot of traction there. Savannah, Georgia, very important port city. If you stay tuned, Luke may talk to you about that one here in a little bit, but Savannah is a very important market to watch here over the next little bit, especially as we talk about these port volumes and imports coming in, not necessarily in as strong as they were in early May or whatnot, but freight volumes still moving strongly out of the Savannah market. Looking at the weighted rejection index just to see where has capacity got the highest chance of being disrupted? Weighted rejection index, of course, the combination of tender rejection weekly change and market share value. So it weights the tender rejection increase in those markets with higher volumes more. Memphis, Tennessee, like we were talking about, showing up number one on the weighted rejection, a 5.9 value, a relatively, it's a relatively strong value, but not necessarily one that we consider very spot market heavy. So it is, however, the most high weighted rejection index for the country this week right now, and we do have Cristobal sitting right there, and it's about to crank over the top of it. So a lot of flooding concerns for the Memphis market this week, especially in the early part as the system moves over the top of it. So Memphis is going to be a very important market to watch. We're going to break this one down for you a little bit more. There's the outbound tender volume index for Memphis showing up right there, shooting up really high here in the last couple of days. So again, with all that weather coming over the top of Memphis right now, it is a little bit of a concern to see those volumes go up. Tender rejection rates did shoot up 7.69%, a lot higher than the average tender rejection rate for the United States right now, which is sitting right around 5.36%. Looking at these lengths of haul, you've got tweener being your biggest length of haul here in the Memphis market right now. Again, anything moving from about 450 to 800 miles out of Memphis, showing some pretty decent volumes, as well as some mid-haul volumes. Again, that's going to be more of your regional movement, going to about 450 miles or so. So the Memphis market is a big market to watch this week. Head haul index is relatively high as well at about 48 points. So that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning. I'm Luke Falasca bringing you another broker update, and it appears that tender rejections are still inching up as we go through the weekend. That's going to apply a little bit of upward pressure on spot market rates. But first, let's look at the volume levels. If you notice in blue, the volume level, we're sitting a little above 11,000 on the index scale right over here. All right, so we saw the massive surge after Memorial Day. That's very normal, very seasonal, and volume levels are starting to fall into a very seasonal pattern. After Memorial Day, they dipped slightly and then remain very level here pretty much through the rest of June and going into the 4th of July before they'll have another dip. Now, we are a little bit higher than where we were in 2018, about 2.5% higher than 2018, and then also higher than 2019 in volume levels. But the pattern is remaining the same. So we'll see if these volume levels continue to hold this seasonal pattern. Time will tell. Now the green line are those tender rejections still inching up a little bit at a time. We're sitting, I believe, right about 5.37%. So that's continuing to push up. Again, still fairly soft, but not nearly as soft as things were. We're sitting actually just a hair above where we were in 2019. Now this map here, again, we're going to look at the volume levels. This is the weekly change volume levels. Markets in blue have the most extreme increase. Markets in red have the most extreme decrease. And the markets in white are a slight uptick. So you'll notice last week when we took a look at this, pretty much all of the West Coast was blue, while some areas are just experiencing moderate increases this week. You'll notice a lot of Texas and pretty much going a little bit west of Texas is experiencing quite substantial growth in terms of volume levels right now. And then also pretty much all along the Northeast, there are some spotty areas in there along the Northeast, but a lot of growth and bumps in volume levels there in the Northeast as well. So if you're looking for some areas to call, Texas might be a good place to focus on, as well as some areas a little bit west of Texas. Of course, up here, kind of in the Iowa, you've got a little bit south of Chicago. You're seeing some pretty good growth, as well as down here in the southeast Savannah. That's going to be obviously driven by the port volume. Let's go ahead and look at Savannah right now. Volume levels are continuing to push very, very high. If you see here, we've pretty much pushed. Since really late April, volume levels have continuously pushed higher and higher. Obviously, we had the Memorial Day bump, at which we're holding very well right now. Now, this orange line is interesting. That's that tender rejection rate sitting at right about 7.74%. So that is about 2.5% higher than the national average. However, if you were moving freight out of Savannah, say 4 days ago, you'll notice tender rejections have actually dropped a little bit. That's going to allow you to apply a little bit of downward pressure on pricing in order to create margins. So just keep in mind, just because volume levels are continuing to hold, tender rejections are actually softening a little bit over the last couple of days. Something to keep an eye on. Now right here, we're going to go ahead and look at our lane signals for the Savannah to Chicago market. Keep in mind, this will be for drive-in. So right now, pricing power is in the favor of the carrier for both out of Savannah and out of Chicago. However, there is a slight advantage going to Chicago. So you should have some easy time covering loads out of Savannah to Chicago. Again, you may not get the best price because carriers do have pricing power right now, but capacity should not be too tight going on that lane. Right now, rates are looking at about $1.55 a mile. That is line haul. Keep in mind that has softened a little bit since last week. We were sitting about $1.62. So as that continues to push down, you should be able to create slightly larger margins on those lanes as that continues to soften. And that was because those tender rejections are dropping that we saw in that last chart. As of right now, it looks like the forecast, if you notice in the bottom right-hand corner of your screen, is going to have a slight softening in the immediate future before potentially tightening towards the end of the summer and early fall. So right now we're sitting about $1.55, and I would expect that to go down slightly, but otherwise you shouldn't see too much change here in the near future. I'm Luke, and that'll do it for today's broker update.
Welcome to your shipper update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Anthony, there's been a ton of confusion and discussion about this misclassification that the BLS had on the latest jobs report in May, and I just wanted to add some color and kind of give an explanation on what happened and what it means for our economy. So this isn't the first time this has happened. This actually happened 3 months ago, and the BLS flagged it immediately. So when the BLS does this survey, they call about 60 or 70,000 households to determine what they were working and how much money they were making in the month of, in whatever month they're doing it. And what happened was, because of this difficult time and the pandemic, a lot of people that had been laid off or temporarily laid off and furloughed and were waiting to hear back from their employer, they were classified as absent from work for other reasons. Now, this other reasons category is typically used for people that are on vacation or people that are caring for a sick relative or child or people that are serving for jury duty. But again, because of the difficulty that the BLS has had collecting this real-time data during this time, the other category's reason was actually applied to some people that had been furloughed and waiting to hear back from their work.
Right, and you mentioned this misclassification, but there's another aspect I think I read in the report that also showed that there were a bit fewer data collected this time around. So not only was there a misclassification, but fewer participants as well.
Yeah, that's right. And we've seen this for 3 months in a row that the unemployment rate was actually probably a little bit higher than what they reported in the report. But the biggest takeaways here for me, if we look at this chart, this is a chart that I've pulled. So these looks at all of the job losses back to 1948. We've got about 10 different years. 2007, the 2000 Great Recession here in blue, and this 2020 unemployment. You can see the depth and the quickness from which it falls. But the three takeaways for me is that the real-time data collection is really difficult during the pandemic. They've had a difficult time collecting this data, and we shouldn't really harp on the BLS for getting this wrong. All of the people that used to work in the BLS under Barack Obama or people that have left the Labor Department, they have said the BLS does their best during this, so there's no reason to get upset with them on this. The second is the unemployment rate remains historically high. It did fall slightly in May, but it remains historically high. Whether it's 13% or 16%, it's still really high.
Right. And that's a big aspect for this, is not really confusing changes and levels here, because the level is absolutely low, and that really kind of signifies just how much further we still have to go. And even if we were to see a 5% jump up, it's still in a really bad place, and that's not even really the case here because we've had that misclassification. When we're looking at this, I think many have expected May or April to really be the bottoming, and that seems to be the case. Maybe this kind of came in a month earlier than many have expected. Now that we're starting to see many major metropolitan areas start to open up their doors again, plans for New York, I just saw Las Vegas is starting to kind of roll plans back into again. Do you think this is going to have any positive impacts in next month's report?
Certainly so. I expect next month's report to be slightly better than this, and I actually expect the July report to be a little bit better than June, and that is when the July report is one I'm really going to be eyeballing, or the July to August report is going to be really eyeballing, because we've spoken about this at nauseum, that is when that unemployment money runs out. That's when a lot of the business loans, there's some clarification coming with that. So, these people have been able, a lot of these businesses have been able to rehire some of these workers because they've been propped up by the government. But when that money runs out soon, we're going to have to see whether the demand is there for those companies to keep those people on. So we may see, a redrop a couple months out. We also may see another case outbreak. It's going to be difficult to determine where it comes from, whether it's the reopening or the protest, because they happen simultaneously. But either way, it's likely that we definitely see another case outbreak because of the rush and out to get back out in the public.
Andrew, thank you so much. Insightful as always.
Welcome, mate.
And thank you so much for tuning in. That's going to do for the shipper update, and that's also going to do for this episode of FreightWaves Now. But the content doesn't stop here. You can check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.